This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. I actually have very good energy. I did a 3-hour yoga class today with a teacher who might as well be in Cirque du Soleil. All inversions, meaning upside down, this arm balance, that arm balance. Good stuff. If you ever make it this way, I challenge you to give it your 3 hours on a Sunday. You will either thank me or try to kill me. But if you try to kill me, you're just a wimp. Let me take you where I want to go today. Lots of headlines in the last month and a half that tangentially touch my world, the world of trend following trading. Trend following trading as a strategy for trading the markets that allows you to use stocks, leaps, ETFs, and futures. All these different instruments you can use to be a trend following trader. Trend following trading is not instrument dependent. However, there is a battle that rages in my world. It is the battle with the phrase managed futures. A phrase that was created for one reason and one reason only, to make brokers commissions. Who cares what the instrument is? It is irrelevant. The only relevant issue is, what is the strategy and how can it help the end user? So, this phrase managed futures is often used to describe many of the traders in my world. In fact, almost every trader that would be in my trend following world will get tossed under the managed futures umbrella. Here's where it gets tricky. Here's where it gets interesting. So does every other strategy under the sun. So the brokers pitch managed futures, which a ton of managed futures, like I just said, are comprised of trend following traders. But then you get tossed in all kinds of other stuff. Who knows what the other stuff is necessarily? You often hear the phrase when you describe a trend following trader as black box. Well, anybody with a pulse realizes it's only black box in the sense that, yes, this particular trend following trader does not want to tell you exactly why he makes his buys and sells. That's his proprietary knowledge. That's his intellectual capital. But it's not black box in the sense that the traders that trade, when the media declares, oh, this trader's a black box trader. It's not like there's a black box and the trader that's actually implementing the strategy doesn't know what's going on. The black box is nothing more than an automated computer program to allow rules that human beings create and to code them to make life easier and, frankly, more precise. Because if you're dealing with lots of data, lots of different markets all across the world, coding those rules is terribly important. Now, the biggest hedge fund in the world, I believe, is Ray Dalio at Bridgewater. He says he trades a 100% systematic portfolio. I've not Googled it, so maybe I'm going to be very wrong in saying this, but I don't believe that Ray Dalio gets the black box headline in the media. So why am I bringing this up right now? Big headline. I'm not even sure which publication it's from. You'll be able to find it, but it says something to the effect, how investors lose 89% of gains from futures funds. It goes on to talk about a particular fund that Morgan Stanley had put out, and that in the last decade or so, maybe more, Morgan Stanley and the managers had made $500 million in commissions, and essentially the clients had been flat. So the brokers go out and they pitch this powerful argument for managed futures, and it's frankly good for brokers. So can you see where it starts to get complicated for me? I don't really care about brokers. I don't really give a shit. What I care about is good strategy and teaching people, whether it's the individual retail trader or a budding fund manager, this style of trading. Once all this fee structure gets put on top of it, this bastardization of the strategy, I mean, that's what Wall Street does. I can think back to the dot-com bubble, the dot-com IPOs, the private placements. Today, these high yield investments, whatever they might be, they invent a new one. They're always inventing some new derivative strategy to sell somebody. So Wall Street's selling products, whether it's, quote, managed futures or all these other products, it's completely normal. Now, is it right? Well, that's a personal judgment you have to make. I'm not buying the stuff. Is it stealing? Well, hold on. If investors voluntarily went to Morgan Stanley and said, here is our money, invest it, and charge us massive fees for this investment in managed futures, which may be trend following strategies, maybe something else. We don't know, or we're not really going to be too clear about it. But I'm sure Morgan Stanley is clear in the prospectus. At least I hope they are. So this article, like I said, how investors lose 89% of gains from futures funds. Misleading, misleading, misleading. It's accurate in the sense that what they report on is true. In the article, it says, quote, today, CTAs can be based anywhere. Their main assets are computers and the people who program them. Bill Dunn, a CTA pioneer, runs Dunn Capital Management from the top floor of a 3-story building in Stuart, Florida, alongside the St. Lucie River. Dunn doesn't cater to most retail investors. He requires a commitment of at least $100,000. He boasts an over 13% compounded annual rate of return over the past 29 years. I actually think it's longer than that. And that's after a 25% fee is taken from profits. He charges no management fee. Dunn says, quote, I think investors are very comfortable knowing that if they're having bad times, we're having them as well. And he says, we're in the same boat. The article goes on to say, in practice, more typical of the industry, Morgan Stanley's profits aren't dependent on investors making money. Once again, as I start this podcast, I really don't care what some brokerage firm, and let's face it, we are talking Ben Affleck and Boiler Room. You can take the nice sounding Morgan Stanley and all that other nonsense, but this is Ben Affleck and Boiler Room with $3,000 suits. I don't see the difference. If it's your cup of tea and you want to buy these products that are slam bammed with all kinds of fees, that's your deal. Go do it. Now, if you complain afterwards, that's your deal too. Go do that too. My deal is to make sure that people understand trend following trading and to make sure that when you hear the phrase managed futures, it can mean anything. There's a guy out of my hometown, and I forget the guy's name. I want to say it's UD Chang, and he just had some recent issues with the regulatory authorities. And as far as I can tell, the strategy is designed for one thing, to generate brokerage commissions. And it does it hand over fist. Look, once again, managed futures. This phrase futures, and what's happened in the last couple years with MF Global, PFG, all of this not making investors whole. These are trust issues. These are bad business issues. However, don't let yourself get fooled into thinking it's related to good strategy. Because good trend following strategy is going to work as long as human beings are on this planet. Human beings loaded with greed and fear. Human beings that love bubbles. Trend following at its essence is simply a strategy that allows you to benefit when unforeseen trends happen. And I have to say, that's a great benefit for when the black swans hit. Those boom surprise events that can wipe out a ton of your wealth really fast. Now, I want to go into a second part of this today, and it's the confusion with trend following. Once again, this is from another in the news piece, and it's about a company called FX Concepts. And a guy named John Taylor, who's been trading, for 20 plus years, a hedge fund that at one point in time managed over 14 billion. John Taylor, his firm, a CTA, a commodity trading advisor in the managed futures space. And recently he was saying that it was harder to predict trends. And the article goes on to say, one clue to FX Concepts' troubles is Taylor's home. In 2010, Taylor bought a 9-room, 3-bedroom apartment on Manhattan's Upper East Side for $22 million, $4.5 million above its asking price, using a loan from FX Concepts. Now, mind you, the headlines are that FX Concepts, this once $14 billion hedge fund, is about to not make it, or most likely won't survive. Now, as you think about that, okay, this guy buys this 20 million plus condo from a loan from his company. Earlier in the summer, he had said trend following is dead because trends never really get going. Investors are trying to read signals in the financial markets pushed by political and central bank dictates, and they've struggled to keep up with the latest government moves. A trend following strategy doesn't struggle to keep up with the latest government moves. It just does. Whatever the government move is, it keeps up with it. Does that mean you're always going to make money? No. There can be volatility, for sure. There can be drawdowns, for sure. So why am I bringing up this guy, Taylor, at FX Concepts? Because it is once again confusing the phrase trend following. So I got an article, or I think it's his global currency program from August 2013. So this is discussing his strategy. And it goes on to say, so what is the investment strategy of FX Concepts? The headlines, the news, say trend following. I see the guy talking about predicting and trying to understand what the next government move is going to be. Hey, guess what? That's a red flag for not being trend following. So how many different strategies does he have? Well, I'm looking at a PDF from his firm. So they got the hybrid model. This model features a variety of forecasting and portfolio construction techniques to adjust the risk allocation to trend and carry based on a series of quantitative inputs. Okay. Then there's one called the carry interest rate. These trading models use interest rate analysis as the primary driver for forecasting currency returns. The carry models use a variety of techniques for managing risk that are different from those used in the hybrid models, including instruments, options, risk aversion forecasting, and stop loss triggers. Well, obviously part of that sounds trend following. What's another one of the strategies? Monetary policy. Looks at trends in monetary policy. Examples: yield curve structure, relative bond yields, relative yield curve slopes. Okay, that has nothing to do with trend following. What's another model? Valuation, mean reversion, and fair value models. What does that have to do with trend following? Nothing as far as I can tell. But when FX Concepts gets mentioned in the media, they're a trend following firm. Hold on, there's more strategies. There's the intraday model. It's a suite of models that have range of trading frequencies from every 5 minutes to every hour. Use a combination of mean reversion, trend following, and correlation techniques. I don't know what his definition of trend following is, but look, 5-minute bars. How did this get to be trend following? The guy's got like 10 strategies. He buys a $20 million condo on a loan from his firm, and his $14 billion hedge fund sounds like it's not going to make it. But once again, it's the bastardization of the term trend following. I'm not angry. I'm not mad. I'm just trying to set the record straight so you out there, the audience, can understand that when you see these articles in the press, if you just critically think and pull them apart, it's not difficult to find out what's really going on. I saw kind of something humorous. I guess it's humorous. I'm looking at it right now. It's a picture from a TS. Yes, I'm done talking about trend following. That's enough defensive trend following. I think you get it. So anyways, the picture that I'm looking at is this poor guy. He looks to be in his 60s or 70s. He's got his jeans down halfway around his thigh, and he's kind of looking down, and there's an airport security guy on one knee kind of looking towards the guy's groin. You can't see, it's a side angle shot, but it says a lot about maybe what I was talking about today. People have their pants down. They don't really know what's going on. They're being inspected. They're being moved. They're having a massive dose of propaganda thrown at them. That is what, and I mentioned him in this piece, that is what I love about Bill Dunn. I love the fact that Bill Dunn, at least to this day and age, after a long, long career, is a guy that you can look to. So when the rest of the world is bastardizing their strategies with fees, all this other kind of stuff that makes the headlines, it's nice to know that you can look at some people out there that truly trade trend following for what it is. It's not perfect. It does not eliminate volatility. But boy, can it be severely profitable. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.